What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. If you want up to 15 free stocks plus $30 cash reward, Mumu is going to give you all of those freebies when you open a new Mumu brokerage account. Now, if you deposit $100 in your Mumu brokerage account, they're going to give you 5 free stocks plus the $30 cash reward. If you put $1,000 initially in your new Mumu brokerage account, they're going to give you 15 free stocks plus the $30 cash reward. Guys, this is a limited time offer, so don't delay. Act today. Get down in the description box, click on that first link, which is the Mumu link. Open up that Mumu account today. Go get that free stock and do not miss that free cash. If you're having trouble figuring out how to use the Mumu brokerage app, all you got to do is send me an email through my website, www.richardfain.net. Second link down in the description box. Let me know you've opened the Mumu account, you funded the Mumu account, and I can send you some Mumu tutorial videos that'll walk you through how to use the basic functions of the app so that you can start buying big boy blue chip paper assets today to build your wealth. There's rumors that the Federal Reserve may pump the brakes on rate cuts. And that's not good because the market has already priced in these rate cuts. And if they reverse course, pump the brakes, and not deliver the rate cuts, stock market gonna cool off. That's just my opinion. But let's find out what's going on today in the stock market and what's happening with the Fed. Here's the headline. Stocks drop for a second day as rising yields weigh on sentiment. Rising yields. Talking about the 10-year Treasury yield. We're going to talk about it. Let's figure out what's going on. Stocks fell for a second day Tuesday as an uptick in interest rates overshadowed a solid start to earnings reporting season. The Dow Jones Industrial Average shed 88 points or 0.2%. The S&P 500 slipped 0.5%, and the NASDAQ composite pulled back by about 0.5%. The U.S. 10-year Treasury note yield briefly climbed above 4.2% for the first time in 3 months before pulling back from that level. Cautious commentary from Federal Reserve officials on the path of interest rate cuts has pushed yields higher. Minneapolis Federal Reserve President Neil Kashkari hinted Monday the central bank may take a more modest approach from here. That's not good, man. It's not good. If they pump the brakes on interest rate cuts, guys, that delays our run, our bull run, right? It delays the comeback rally. And I'm positioned right now in my portfolio. I want to finish the year strong, and I'm going to need them interest rate cuts in order to do that. So that's a little bit alarming, but let's keep reading. Yields have actually increased since the Fed cut by a half point a month ago. Part of that move can be attributed to improving economic data, but some of that increase is due to pessimism. The Fed won't be as aggressive with rate cuts moving forward. So that's the market saying, we may want to move over here to yields because this thing over here may not be what we think it's going to be. They may not cut these rates. And if they don't cut these rates, Growth stocks don't go higher. So let's move over to this 10-year treasury yield. Hey, that's the way it works, guys. So you got to be in position in order to be able to make moves that work for you, because you know the Wall Street aliens and the institutional investors, they're going to do what's right for them. Traders see an 89% chance of a quarter point cut at the Fed's next meeting ending November 7th, according to CME's FedWatch tool based on Fed funds futures trading. Traders are also eyeing a fresh slate of earnings reports that are set to come out this week, including Tesla, Coca-Cola on Wednesday, and Honeywell on Thursday. So far, about 19% of companies in the broad index have reported results, with more than 7 out of 10 topping earnings estimates, according to FactSet. The market has been on a hot streak in October, with the S&P 500 reaching a record and stretching its year-to-date gain to beyond 22% return. Had you got in the S&P, guys, back in January when I was encouraging y'all to get in, you'd be up 22% on the broader. That's why I'm telling you guys, if you only got one investment you can consider the S&P 500 index through an S&P 500 ETF that tracks that index. A loss in Tuesday's session would be the first back-to-back losing session for the benchmark since early September. So there you go, man. The Fed plays a big part of this thing with interest rates. The reason we're running right now, guys, is because of that big 50 basis point rate cut and the dovish attitude of the Fed with their forward guidance. Now you see some Fed officials starting to backpedal a little bit, saying, wait. We may have to have a little bit more modest approach. All that means is, those are code words for maybe we don't cut rates in November. Maybe we just cut rates in December. Instead of doing 50 basis, maybe we do 25 for the rest of this year. That's not good, because we've already priced, the market has already priced in these cuts, and we need these cuts so we can continue this comeback rally. We'll have to see, man. All I'm going to do with my position in my portfolio is I'm just going to keep buying. I'm going to keep dollar cost averaging in. I believe we go higher this year, and I believe we can certainly go higher next year as they continue to reduce interest rates. I think the Fed has no choice but to bring these interest rates to neutral. They've had them higher for longer, too long, and they need to bring them to neutral so that we don't run into any problems in our labor market. See, the thing is, you can't be reactive on the labor market. You got to be proactive. That's the reason they got to keep reducing these rates. They got to be proactive, not reactive. It's too late. It's too late if the labor market goes into the tanker. It's too late. You got to be proactive and reduce these rates before anything happens to the labor market. So I think they keep reducing no matter what some of the other Fed officials say. I think the Fed as a whole, the FOMC as a whole, will continue reducing rates. What's going on with the 900-pound silverback Nvidia? Well, let's take a look at it. Right now, we're at $143.88 per share. $143.88 per share. It already hit a high today of 144.42. Let's see where we can end this thing today. What do you guys think? Drop it down in the comment box and let me know, what do you think Nvidia will close today? Let me give you my prediction. I believe we close at $146 per share today. But down in the comment box, let me know what you think. If you want up to 15 free stocks, Mumu is going to give you up to 15 free stocks when you open a new Mumu brokerage account. You put $100 in that new Mumu brokerage account, they're going to give you 5 free stocks plus a $30 cash reward. If you put $1,000 initially in your new Mumu brokerage account, they're going to give you 15 free stocks plus a $30 cash reward. Guys, don't miss this opportunity. This is free money they're giving you, plus they're giving you free stock. All you got to do is deposit some money into your new brokerage account, and you're ready to rock and roll. So do not miss this opportunity. Get down in that description box, click on that Mumu link, open up that Mumu account today. Go get that free stock. Go get that free money. www.richardfain.net. That's my website, guys. I got 10 big boy blue chip financial digital products on the website that are waiting on you. Everything from investing in real estate with little to no money down, how to invest in the stock market, right? How to manage your money better, everything. Credit score increase, credit score restoration, credit score repair. It's in there. All you got to do is get down to the second link in the description box, click on the website link, go check out those 10 big boy blue chip digital products, make an investment in yourself, and collapse time frames and get to your pot of gold at the end of the rainbow quicker, because you got knowledge. And with knowledge, you're ready to execute if it's the right knowledge. Also, consider joining the Wealth Builders, the fastest growing financial community on Patreon. We're called the Wealth Builders. We got over 1,000 Wealth Builders in a little over 5 months, guys. We are rocking and rolling, and our whole existence is there to help people build wealth. Normal, everyday people. None of us are experts. We're just normal, everyday people who've decided to band together and help each other build wealth through tips and nuggets, best practices, what's working, what's not working, financial encouragement, financial community. We're just there to support one another, guys. Please join us. Like I said, in the website, click on that membership button, click on that join button, get over to the Patreon side of the community, which is the fastest growing financial community on Patreon, and sign up. Come join us. Come be a part of our family. Be a part of our financial family, guys. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you on the next video. Peace.